You see stocks there drifting higher today ahead of weak jobs data and continued uncertainty around trade policy. Lower bond yields may be helping somewhat with that. All of this uncertainty is why my next guest is turning to high-quality dividend growers and likes three names in particular. David Bahnsen is the Bahnsen Group's CIO. So these are the kind of, David, speak to the anxiety, people have about this market as well as it's done. This sense that is it too good to be true and kind of where do you go if you just need a little bit more ability to sleep at night?
And I think you get some of that ability to sleep at night if you're not so reliant on expensive things getting more expensive. That's really the key is you already have the things you're talking about, top-down macro uncertainty, tariff policy, geopolitics, things like that. But when you combine that, Kelly, with high PEs that you just need to get higher in order to see your investments do well, I think that becomes problematic. Dividend growth immunizes investors from some of that.
I think the growth emphasis is important here because we've seen a lot of dividend names that end up having to cut those dividends. They seem attractive or cheap or whatever until that cash isn't there. Those returns aren't there. So what are a couple of the names that jump out to you?
Well, I love talking about IBM, and that's one of the names that's done really well this year. There's other names that haven't done as well, which I like even more because they're cheaper. IBM's up 20%, but here's the thing. It's trading at 17 or 18 times what 2025 free cash flow will be. You're talking about that up against other names trading at 40, 50, 60 times what their free cash flow may be. IBM has grown the dividend, Kelly, every single year since 1994. Think about how much has gone on in the world over that 30-plus years. IBM's grown the dividend every year in that period.
Impressive.
So we just think it's a great name that's tethered to both old tech and new tech.
And that was our mystery chart, by the way, as you said. Look, and its dividend yield is only 2.5%, but it kind of gives you that bolster. So Texas Instruments, people might be a little more familiar with. Brookfield Infrastructure, that one's on your list here as well.
Yeah, and that's a name that people probably have not heard as much about, but it's investing in data center, pipelines, a lot of hard assets, real infrastructure build that are cash flow generative. It's very well managed. More famously, recently, the new president in Canada was a director there at BIPC. But, I mean, you're talking about major U.S. and North American assets with good dividend yield, and it's going to be growing that yield high single digits.
So it's almost like we can ignore all. I mean, there's so much almost fun drama here. What's going on with the budget bill. I don't know if you have to game out what happens there or if you can just say ignore it all and kind of look to the fundamentals here that you were just describing.
Well, what we always encourage people to do is look at the companies with just the dividend. And if you were looking at the chart of just the dividend, would you even know about the drama? Because the stock price is going to reflect a lot of drama, investor sentiment, either euphoria, panic. But on a daily basis, free cash flow growing, they're continuing to share more and more of it with you. We really do have an awful lot of companies, Kelly, that their chart looks like a straight line from San Diego to New York. It's the stock prices that have a little more adventure along the way, but not the dividends.